My guest today is Arvind Rao, who is a chartered accountant, certified financial planner, and the founder of Arvind Rao and Associates. Thank you so much, Arvind, for taking the time. I want to start this conversation by asking you about your own personal experience in speaking to people. What have you learned in terms of the outlook people have? Are there mistakes in the planning part of things? How do people normally go about it? And what advice do you give to parents who are not sure about what to do as far as their children's education is concerned?
Yes, Alex. Hi. So definitely this has been a kind of a mixed experience because when we talk to parents, typically they always aim and aspire to give their best for their kids. And in the last 5 to 8 years, this best has always come out in terms of looking for a foreign education for their kids. Somehow we see that let me put a number to it. 8 out of 10 people seem to be thinking that a foreign education is going to be better for their kids. And depending upon which life stage they are or how old the kid is, people start thinking that their kid might be interested to go abroad and start their education. Now, many a times this is good to be as an aspiration, but the biggest challenge here is that you never know how things will turn up as the kid grows. So I think this is what makes this process of planning for your kids' higher education a very dynamic one, because depending upon how early you start, you don't know where it is going to lead you to.
Understood. That's a completely fair point. And specifically when it comes to higher education and education abroad, what are the numbers that you normally contend with? I'm sure that you've gone into the details of this as well. For those people who are unaware, perhaps you can give them a ballpark figure or an idea as to how much this could cost?
Sure. So let's look at the broad contours. If you look at the typical countries where people send their kids, it ends up being a US, Canada, UK, sometimes Australia, nowadays Singapore as well. Now, after looking at and doing some number crunching around this, what we have generally observed is 40 to 45 lakh per year is a good budget to keep for getting educated in any of these countries. And this is the per annum budget. So one may choose to have their kid being sent across to do their undergrad, which will typically be something like 4 years of education. Or if they're looking to send the kids abroad for their masters, which will typically be around 2 years of education. So if you were to take these numbers, 45 lakhs for 4 years would mean somewhere close to 1.8 to 2 crores today. And for a master's, it will be like around 1 crore today. Now, invariably, we would suggest that one should look at applying an inflation rate of close to 5% and take these costs to the year in which they expect their kid to be utilizing this, which could be either age 16 or age 20, as the case may be.
I seem to be having a bit of a technical difficulty, but I'm assuming at this point that you've taken our viewers through what the cost would be, and you've broken this down into the various countries that people normally send their children to. The point is that this is a very large amount of money. How early do you start saving for this? Do you start when your child is, for example, less than 10 years old?
And I think this is the first factor in the whole dynamism here, because I think as soon as a kid turns 5 to 6, parents start aspiring that they will want their kid to be educated abroad. And obviously at that stage, the parents or even leave the parents. I think the kids have absolutely no clue where they are going to land. The parents wish that they will be educated abroad. So at this juncture, when parents, when we talk to parents about this, our general approach here is that obviously planning for a foreign education will definitely be a huge cost. But in the absence of any clarity in terms of where the kid will actually land, What makes more sense is to plan and provide for a foreign education. Because as time progresses, if it so happens that the kid decides, or the kid and the parents both decide not to go abroad, but to be educated in India, definitely what the parents must have planned for the foreign education, that will easily be at least 20 to 25% more than what is required to fund the domestic education. So we have seen this works better because having a higher provision for the kids' higher education always works better, because in case they end up not going abroad and pursuing something that they like within domestic regions, then what happens is the parents can either use this surplus money, if they have accumulated this, for the kids' career startup as a corpus, or they can even push this and use this money for their own retirement if it happens to be underfunded as on date. So the reverse may be a problem, because if you start planning for domestic education and as the kid grows, he or she reaches a stage when they say that I want to be educated abroad, that might be kind of a rude shock for the parent, because they would be heavily underfunded to meet such a huge cost. Which is why we generally advocate to do the reverse and see how time spans out.
Welcome back. You're watching The Money Show, and we're speaking about education and what you need to do as parents, young parents, or in fact parents of maybe an adolescent, to plan your child's education. Now, we were speaking, Arvind, about the fact that this is a very large expense, and the earlier you start, the better. But if you were to get into the nitty-gritty of it, assume you start as early as a child's 5th birthday. How do you structure this? In that you would want to have growth of capital, you would want to make use of equity in that span, but towards the end of that period where you're saving, you don't want to take that risk. So how do you structure that investment?
Absolutely right, Alex. Because starting as early as 15 to 16 years, when you have time, equity has to be the factor, because over this long time frame, I think equity seems to be one of the asset classes which has the potential to kind of give you double-digit returns. And resources are always going to be an issue when you are planning for such a big ticket expenditure. So in the initial years, I think there has to be a very large portion. In fact, let me be quite upfront saying that even if 100% of the savings go in equities, whether it is via mutual funds or whether it is via a share portfolio per se, both these will give the power to this portfolio to grow in a larger bit. And like you rightly said, around generally we use a 3-year parameter. Close to when you are around 3 years away from reaching the milestone is when you start thinking of consolidating. Now, depending upon how conducive the market environment is at that point in time, you can either do it partially, which is why a 3-year time frame looks much better, where you start consolidating these funds and moving it from riskier assets like equity and mutual funds to debt. And these debt could be, sometimes bank fixed deposits, or if the parents have identified the foreign course, one can even look to park this in this money in foreign fixed deposits as well, because it becomes easier to make the dollar payments for them. Of course, one has to go through the applicability of applicability of being able to keep foreign deposits. But if that's an option to some of the parents, they should look at it, because at least they are then eliminating the short-term currency movement that might affect their plans.
There was also a point that we were speaking about in the run-up to this conversation about loans, right? Because considering that you would have such a hefty amount and you don't really want to eat into your own savings, you might have to take a loan. So a student loan, are there options to get it on the cheap, or at least lower interest rates?
So, Alex, let me share with you something that I came across very recently. That obviously many of us are aware of the loans that are available with the state-owned banks here, as well as some of the private banks and NBFCs which provide education loans for children. Those are options. I think there the interest rates today are hovering anywhere between 9 to 11 or 12%, depending upon the financial underwriting of the parent as well as the extent of collateral that they can provide to them. But what is interesting here is that, and I'm talking specifically about the banks in US, is that these banks also provide education loans for children coming from India to get educated there. One of the principal requirement for availing this loan is that if you have a what is called as a co-signer, which is I think as we look at here maybe a guarantor in the local context. So if you have a co-signer who is basically a person resident in US and has a good credit history, believe it or not, some of these institutions in US offer loans as low as at a 1.5 percentage per annum rate, which is really good. So, I mean, if somebody has family or good relatives in US with a good credit history, definitely cheap loans are possible. And if not for this, there are banks or financial institutions in US which also provide loans without the co-signer. In which case the rates go, it starts from around 6 to 7.5% and can go higher depending upon the collateral that is available or not. So this is the broad spectrum in which one can take up loans. And of course, I think the sweetener when it comes to education loans is that if you are taking loans in India and financing them, then you get a tax break for the interest that you pay on these loans, which is quite a huge saving for the parent, because the good news here is that there is no cap on the interest that you pay for the education loan, and whatever interest you pay for the first 8 years of the loan, all of that will be available as a tax deduction. Of course, if you happen to take a loan in a country abroad for funding this education, you won't get a tax break in your Indian income tax. But the co-signer there or the family there who is helping to repay this will get a tax break in their US tax laws there. So this is, I think, a brief summary of how one can look at loans.
All right. It's been an absolute pleasure speaking with you, Arvind. Thank you so much for breaking that down, and I hope that our viewers will benefit from this. The core point, I would think, is to start as early as possible to take advantage of as long a period as possible when you're saving for your child's education.